Hey, it's your girl, Realtor Willis. I wanted to just speak on a few things that confuses a lot of clients. So when it comes to applying for a mortgage, the lender will determine from looking at your credit, your income, and things of that nature, and the house, but mostly that comes later, on which loan programs that you qualify for. There are several programs that are out there. The most common ones I'll tell you about just to give you an idea. So FHA is a Federal Housing Administration loan. It's government backed, and that is the number one loan program that most first-time home buyers or home buyers in general, that's the easiest to qualify for. The credit minimum for an FHA loan is 580. There are some lenders that their standard is 600, or some lenders that is 620, but 580 is really the bare minimum credit score that they would go to. But then you have to have higher income, you have to have more assets, so you got to have a better combination in other areas if you have a lower credit score. FHA loans are easy to get into, but not every house is FHA approved. FHA loans are for purchasing homes that are in move-in ready, not necessarily tip-top stainless steel appliances, quartz or granite countertop kind of homes. It just has to be move-in, livable condition. The carpet has to be decent. Not saying no stains, but it has to be decent. It has to have livable flooring. You're not going to be falling through the floor. It has to have handrails on the steps or whatever for safety. It has to be safe living. It's one. Then we also, there is the FHA 203K. If you find a house that isn't safe living, you could purchase. The 203K loan is when the bank gives you money to buy the house as well as to fix up the house. So that's two loans wrapped into one, and you pay. So for instance, you buy a house for $100,000, you finance $200,000 in repairs, so now your mortgage is on a $300,000 house. The issue with 203K loans mean you really have to buy the house for $100,000, and even a house that needs $200,000 in work is still not $100,000. It's more so going to be $150,000. So still, that house is not eligible. You can't purchase it because it's already overpriced. So FHA is the number one. Then we have, FHA is a 3.5% down payment, and that's basically your portion of the purchase price, the portion that you have to come out of pocket with for the purchase price, which is 3.5% down payment. That's your skin in the game. Okay, so then we have conventional. Now there's two different kind of conventionals. We have the traditional conventional, which is a conventional loan is not much different than an FHA loan. You could buy the same houses with conventional that you could buy FHA. But the only thing is, now conventional is more stricter on the buyer, not the house. Conventional loans, you have to have a higher credit score. So the minimum for some lenders is 640 for conventional, but then there are some that require you to have a 680 or higher. So it really just depends on the lender, but most lenders carry both programs, the FHA and conventional. And conventional has a 3% down payment, so that's your portion of skin in the game. The bank will pay 97%, you will pay 3% towards the purchase of the house. Now then we have the other kind of conventional, which was more so brought out for investors or whatever, and that is 5, 10, or 20% down is the conventional loan. Your down payment portion, 5, 10, or 20 is your percentage into the purchase of the home. Conventional, like I said, you just have to have a higher credit score, but if you qualify, good for you. That's great. Then the other most common mortgage loan that people qualify for is VA, which is backed by the Department of Veteran Affairs. And this is for military personnel as well as U.S. veterans. So if you serve, you may qualify for VA. Not everyone qualifies for VA, but I would say about 95% of veterans and military personnel do qualify. Now with VA loans, the sweet thing is it's 100% financing. So there's zero down payment. That doesn't mean you don't come out the pocket with anything to buy the house, but you don't come out the pocket with anything as far as towards the loan. Okay, and then the final one that is most common is USDA, which is backed by the U.S. Department of Agriculture, and this is for those that are looking to buy a house in rural areas. So most parts of Upper Marlboro are considered rural. And then we also have Bryan's Road. We have some parts of Charles County, PG County. Mostly Upper Marlboro, you might find a house, but not every house qualifies just because it's in Upper Marlboro. You actually have to look on their website or go through different channels. And most people will already know if that house is USDA qualified. And that's mostly it for the main common ones. It's FHA, conventional, VA, and USDA. There are others like jumbo loans, bridge loans, and all of that, but it really just depends. But most of those loans are for investors. But if you're looking to purchase a home to live in, those are the most common ones. So if you have any further questions, you want to learn more about mortgage loans, please feel free to give me a call. I would love to assist you. 202-403-1407. Thank you. Have a good day.